My actual base case hypothesis is that next year, this big rise in CPI prices, commodities, goods and services, actually slows growth down. In a very indebted world, if you raise prices on people, they tend to spend less, as do businesses. Well, so, generally speaking, I've switched 100% of my liquid net worth.
Welcome to Dream Richer. Early this year, USA saw the initial ripple effect of inflation with high fuel prices. That led many to argue that recession is right around the corner. As economists argue, late 2022 and well into 2023, we are set to see the worst of the recession. As they argue, many will go bankrupt, businesses will be forced to shut down, and an economy collapse like the 1900s will repeat itself. For some, these claims may seem all but a load of speculation. But what do large whales and millionaires have to say about this? Today, Mr. Raoul Pal explains where he sees our economy headed this year. In his words, our currency is set to see a severe decoupling, with the CPI prices at an all-time high from the past 5 years. The CPI is a measure of the inflation in a country, and inflation rates have a large impact on central banks' decision-making processes. When inflation gets too high, it is very likely that the central bank will raise interest rates. And when it is too low, they will lower interest rates. Of course, higher interest rates cause increased demand for a currency, and usually a higher exchange rate. By the end of today's video, I will also give you some positive outlook on the economy and how it's currently performing. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
I think there's two types of inflation that we need to be aware of. One is this headline CPI-driven inflation that's being driven by supply chain constraints right now. That is different, and I don't think it really affects crypto markets per se. The inflation that drives crypto markets more so is the printing of money by central banks. And you can measure that by looking at the amount the central banks print and the effect it has on asset classes. It's actually highly correlated. And crypto does particularly well when the central banks are printing. Because of its limited supply, it has its scarcity value, and it tends to rise, but it also rises exponentially because it has this call option on the future element to it as we're building out this new technological world. So it works at two levels and works much better than most other asset classes for this debasement of currency that's happening. My actual base case hypothesis is that next year, this big rise in CPI prices, commodities, goods and services, actually slows growth down. In a very indebted world, if you raise prices on people, they tend to spend less, as do businesses. So I think we actually will see slower growth and less central bank tapering or reducing of stimulus. So I don't think that's next year's story. If it is, it's the back end of next year. In the meantime, I think we'll probably get a bit of a growth scare during the first half of 2022. And that should continue, I think, to support the crypto markets. The Fed and the Bank of China, People's Bank of China, those on average are printing about 15% a year. Now, there's periods of time where they don't, and that tends to be not great for asset prices. And then what happens is they come back again. So I think it's an ongoing phenomena that will be with us for at least another decade because of this problem of debt and slow growth.
The CPI is a measure of the inflation in a country, and inflation rates have a large impact on central banks' decision-making processes. When inflation gets too high, it is very likely that the central bank will raise interest rates, hence causing increased demand for a currency and usually a higher exchange rate. As of April 2022, the CPI of the United States sits at a whopping value of 288.663. Comparing this to the CPI from just July 2021, where the country sat at 272.265 CPI. This has seen a sharp increase in gasoline, food, and shelter prices, which are arguably the basic necessities for human survival. As of yet, they show no sign of slowing down, with the Feds set to begin increasing rate hikes this year.
There are no safe bets in this world, but if you look at the adoption rate of crypto right now, It is the fastest growing adoption of any technology in all recorded human history. Back in 1997, the internet was growing at 63% a year with 150 million users. Crypto has about the same number of users, and it's growing at 113% a year. So the network adoption of this entire digital asset space continues to grow. So not only is that the technological side, but if the central banks continue to print, the price should do particularly well. So, you know, generally speaking, I've switched 100% of my liquid net worth into the digital asset market. And there'll be times where I'll have less of a weighting, but right now it still seems the right weighting to have. You know, I've spoken to a lot of corporations about this, about, you know, why do they have stuff on their balance sheet? And when you ask them, it's really for a few things. One is to buy back their shares in the US. The other is to buy real estate, and the other is to buy other companies. And the problem is the debasement of fiat currency means that all of those things go up. Their own share price goes up, the cost of real estate goes up, and the other companies they want to acquire go up in value, and their cash doesn't, because they get 3% return on their cash. The regulation's very far behind in the space. But, you know, countries like Switzerland, Singapore are leading the charge here. I think we'll see the same coming out of Dubai. And I think eventually Europe will start to figure out, okay, what is the right strategy here? And I don't think it's going to be about blocking access. It's going to allow people to understand what the risk is. Now, traditionally, unless you're a wealthier person, you're not allowed to invest in VC, which doesn't really wash in this day and age, particularly with a very skewed younger population from the millennials. They want access to attractive rewards with equity markets at all-time record valuations, property at record valuations, bond yields at all-time lows. Their opportunity set, and real estate super expensive, their opportunity set is very low to generate future returns. And crypto is the market that they really are interested in. So it's quite difficult for politicians to go against such a large group of voters. So it's really interesting. There's a battle to be fought about regulation, but I think a grand compromise will be reached that will keep everybody happy, allow KYC, AML, and all of the things that the state organizations need. They will try. And as I said before, it will be a battle that will not be finalized, probably in, let's say, till 2025, when we'll eventually have a set of digital asset laws, as opposed to using the existing infrastructure. So there is going to be, I think, the feature of the second half of 2022 into 2023 will be regulatory uncertainty. Obviously, for institutions, it's relatively straightforward now. Most of them have an ability to buy Bitcoin and other things. It's the battle is for the retail market and the launch of the CBDCs out of the central banks. You know, Europe wants to get theirs launched whenever they can. The US is working on it, but is further behind. India is about to go, Singapore is about to go, everybody's about to launch theirs. What they're creating with the central bank digital currencies is not a competitor, they're creating the digital on-ramps and off-ramps. So they want to make sure that they capture what they need, which is their tax take, and to understand the KYC, AML elements. So I think DeFi's got a fight to come as well, because there's very limited KYC and AML.
It's clear from Raoul Pal's explanation that the US economy is set to see a strong decoupling. But when exactly does he see this coming about? In his words, the ever-increasing CPI prices will slow the economy down by next year, meaning 2023. Will that be early January or mid-2023? We are not so clear on that as of yet. However, the investor is certain that once prices skyrocket, consumers will begin to spend less on the products. With that said, many experts say the economy is showing other signs of strength. For example, while inflation has increased, the unemployment rate fell to 4.6% at the end of October. This is the lowest since April 2020, when the unemployment rate hit a historic 14.8% at the beginning of the pandemic. What do you think the future holds for the economy? Do you agree with Raoul Pal? To learn more about the latest crypto news, watch these videos here.